Yo, what's up, guys? It's your boy Looney, and welcome back to the journey. This is the road to 100,000, where I'm showing exactly how I'm growing my portfolio from scratch with strategy and not hype. Right now, you can see I'm currently sitting at 55,000, so a little over halfway there. And honestly, this stage is all about discipline and patience. Recently, the market was volatile, and now we're seeing things cool down. And today's actually a red day. I'm down about 0.7%, but I'm not panicking. I'm just adjusting. I'm going to get into what I'm doing, but before we get into it, quick shout out to the Discord. It is free to join. And then I also offer a premium membership, which gives you access to my one-on-one coaching. I do trade call outs. I have an option selling course and more. I do giveaways. You can check it out. The links to that are in the description. But what am I doing right now? I'm still DCAing into crypto. Not because I think it's cheap, not because I think it's a good time to buy. I'm doing it to build a position. This is a long-term position and strategy. I'm putting small amounts into Ethereum, Bitcoin, and Doge. And you might be wondering, if I want to build a position, why am I putting such little amount? And I'm only putting $3 a day. It's not heavy. I'm building this long-term exposure while also keeping the risk in check. So really, I do feel that crypto is a little overvalued right now, and I want to buy more when we're in a little bit of a bear market, or when people are screaming that crypto is a scam. This is when I'll start deploying a lot more than just $3 a day. So right now I'm just building that foundation, building that position, and then when the market becomes fearful, that's a good time for me to start building even more. So that's why I'm not building a big position, or it's not a big position. I plan to. Overall, it does take up a lot in my portfolio. I also have a lot of crypto mining companies like Riot. So though I don't have a big Bitcoin position, I am invested into crypto one way or another. And also, just speaking of caution, I've got about 14% in cash. I have 7,500 in cash right now. This is just dry powder. I'm keeping it on the sidelines for the right dip and opportunity. If we see more red days in the future or some black swan event, I'll be ready to strike. Now let's talk about what I used to deploy my cash in recently, because I did have about 11,000 in cash, and now I'm sitting at 7,500. And that's Oscar. So Oscar is a health insurance company, and right now it seems like it is becoming a little oversold, and I think it's a great opportunity. So I've been selling cash secured puts here because I just think it's oversold. It's got $2 billion in cash, and it has solid financials in general, and 90% institutional ownership. So this is not just a meme play. This is a real company. The fundamentals haven't changed despite recent news and headwinds coming out. And I'm really excited to see what the earnings come out to be. And I could see this stock doing very well. This might just be a short-term volatility for long-term gains. So I wouldn't be surprised if this goes down to $10. And that's why I have sell puts. So I have one at $15. I'll probably get assigned $12, $11, and $10. So the $15 I did on the initial dip, and the other ones I did more recently. So we'll see where this stock heads at, and I'm hopeful to acquire 400 shares and then sell covered calls, or just simply own it at these prices. And to do these sort of trades, I'm getting paid in premium. So I got premium to do these trades, and I'm also dollar cost averaging essentially with doing this strategy. These are the type of plays I give out to my premium members. So if you want to join, again, link is in the description. So let's look at some positions that aren't doing well. Despite this bull market, this bullish trend, I'm up 10% year to date. Past year, I'm up 30%. I am in a bit of a situation with my covered calls. My covered calls are in the money. So what I'm doing to manage these covered calls, because you can see this is my percent return. I have it set to my total percent return on these positions. The NEO one, I don't really care. I'm looking to sell these shares off, but the other positions, I am red. I'm in the money and they're negative, but I'm not concerned because I am rolling these. I'm rolling my covered calls and managing them, and I'm doing it on SoFi, Riot, and Mara. Doing this, it gives my shares more breathing room to appreciate and let it go further without getting my shares called away. Yes, it is more management doing this, but it keeps me in control of the shares I believe in. Now, we could see here that I did roll. So I rolled these SoFi calls recently, and by rolling them, my break-even price is a lot higher. I'm at $22, which is actually higher than the stock right now. And by rolling it, I got some breathing room. Obviously, I need to get it up to like $20 of a strike price, but not in a rush, just managing these, rolling them when I can, and just getting premiums. For now, I'm having to pay a net debit, but again, I'm okay with that. I'm okay with letting my shares appreciate and catching up, essentially. On the other hand, I'm still holding my long-term leap call options. These ones are doing a lot better because of this bullish trends. And I'm just keeping them untouched for now. These are bets on long-term growth, so I don't need to overmanage them. I have a Riot $5 call, and I did this during the bearish trend in April and somewhat into May. I'm up about 135% or $540. So I'm just simply holding this one and not really planning to do anything, not planning to sell or not planning to exercise right now. I still have about a year for this one to expire. Same with SoFi. This one's a 2-year plan. So excited to see where SoFi ends up. I'm up about 74% or $560. So the only thing that is red from my portfolio is the Oscar selling puts, which I said before, I am okay with. I'm okay with getting assigned. That's the name of the game, is to buy low and sell high, or buy the fear. So that's what I'm doing. I'm buying the fear, selling puts on a stock that I feel is cheap. And I'm just managing my covered calls. My covered calls are the ones that are also struggling. I'm gonna have to roll this 10.5 and this $10 put. I also rolled one again with Mara, and now it's green by rolling it. So this one is a good example how effective rolling can be. My break even is higher than the stock right now, and I could roll it again, and I'll probably get paid to roll it if it continues this way or stays the same price. And also stimulate, when you go to the returns, when you stimulate it, I'll be up 278. So pretty good returns by just rolling. Now, what are my final thoughts about this journey to 100,000? Because it's not about YOLOing. It's not about chasing pumps. It's all about deploying capital strategically and taking high probability trades by selling options, low delta, and on red days, ideally, and just letting compounding work. If you're building with me, drop a like, share how your week's going, and if you want to see my trades in real time, join the Discord. It's free. Let's keep stacking. Catch you in the next one. Peace.